Hello my dear CMA interest students, welcome to our YouTube channel. Today we are going to revise very beautiful topic that is called issue of bonus shares of corporate accounting, right? Generally this topic come for 7 mark or it may be added in the share capital or redemption of preference share sum. Okay, so let's start. What is bonus shares, sir? Bonus shares are free shares issued by the company to its existing shareholders by capitalizing its free reserve, right? So whenever the company have reserve, huge reserve, that time they capitalize the reserve by way of bonus. Okay, now so the ways for capitalization of free reserve. How many ways are there, sir? Two ways are. Number one, you either convert the partly paid up shares into fully paid up by way of bonus dividend or issue a fully paid bonus shares. Now, you cannot issue a fully paid bonus shares unless and until you convert the partly paid up shares into a fully paid up, right? Like let's take example, the face value of the shares is 10 rupees and company have called 8 rupees. Now you have two options, either you call this 2 rupees as a bonus dividend or you call these 2 rupees from the shareholders and then issue them fully paid bonus shares, right? Okay, next my dear student, provision relating to issue of bonus shares as per the company. What Companies Act said? Companies Act says that company can issue fully paid bonus shares out of what they can use. Number one, free reserves. Number two, securities premium account. And number three, capital redemption reserve, right? So you may ask me, sir, why we use securities premium? Because one of the utilization of securities premium is what? Bonus, right? So company can issue fully paid bonus shares out of securities premium account. Okay, next my dear student, what is second condition? They said no company shall capitalize its profit or reserve for issue of bonus unless its articles are authorized. That means article must authorize for issue of bonus shares, then board must recommend for issue of bonus shares, then company should not have make any default for payment of principal and interest of fixed deposit, and next condition, company should not have made default of any payment of statutory dues, that is gratuity or employee provident fund. Company should not have made any default for that, right? Okay, next or any other condition, right? Okay, next my dear student, the bonus shares shall not be issued in lieu of what, sir? Dividend. Next, company which announce the bonus, right, after the approval of board of director, they must issue a bonus within 15 days. But if the company delay issue of bonus shares, then they need to take the approval of shareholders. Okay, next. Now you may ask me, sir, what is free reserve? You are telling free reserve, free reserve. What is free reserve? Free reserves are those reserves which are available for distribution of dividend, right? Like general reserve. Then next, capital, like capital reserve if it is realized in cash. Dividend equalization reserve, profit and loss account profit, these are the free reserves. Okay, next, free reserve does not include what, sir? Any amount representing unrealized gain, notional gain, right? Revaluation of asset, they are not a free reserves. Next point to remember, first point I have told you, capital reserve is treated as free reserve if realized in cash. Conversion of partly paid up shares to fully paid up, that means unless and until you convert the partly paid up shares into fully paid up, company cannot issue a fully paid bonus shares. Then company may issue a bonus by way of converting the partly paid up share into fully paid up. We call that process as a bonus dividend. Okay, next one. Next, my dear student, point to remember, as per section 52, what it says that the securities premium account cannot be used as a bonus dividend. It can be used only for the purpose of issue of fully paid bonus shares. And capital redemption reserve also cannot be used as a bonus dividend. It can be used only for the purpose of issue of fully paid bonus shares. So bonus dividend, in just now I have told you, by converting What, sir? By converting the partly paid up shares into fully paid up by way of bonus, we call that as a bonus dividend, right? Instead of asking the money to shareholders, we are converting that partly paid up shares into fully paid up by way of bonus, right? Okay. Next, now what is the accounting, sir? There are two ways, right? Number one, company may convert the partly paid up shares into fully paid up. So first one, at the time of declaration of bonus, when company declare a bonus, so what is the entry? They will say free reserves account. Reserve will have credit balance, and when you capitalize the reserve, we have to debit the reserve. So free reserves account debit to bonus to shareholders. And then at the time of making the final call, when you call the final call, our entry will be share final call account debit to share capital account. Share final call to share capital, and then we adjust the final call against the bonus to shareholders. Bonus to shareholders have credit balance, we debit it. So bonus to shareholders account debit to what, sir? Share final call account. Generally, when you receive the final call, what entry we pass? We pass the entry called cash account debit to share final call account. Now what is happening, my dear? So we are not receiving this money, right? So instead of cash, what we replace, sir? What we replace? Bonus to shareholders, right? This bonus to shareholders. Is it clear? Okay. Next, sir, if you want to issue fully paid bonus shares, then at the time of declaration, what's the entry? Or entry will be first capital reserve account debit if realized in cash. Next one, capital redemption reserve account debit. Next one, securities premium account debit, and then free reserve. This sequence is very important in the exam. Don't change this sequence. Then bonus to shareholders, and at the time of issue of bonus shares, bonus to shareholders account debit to share capital to securities premium if they issue the bonus shares at a premium, right? Okay. Then you may ask me, sir, can a company issue bonus shares at a premium? Because in our illustration, they have given that company issue the bonus shares at a premium. Okay. Now with this, we are going to solve one problem. So your entire bonus issue will be completed here. Okay. Let's read the problem. The paid up share capital of AB Limited consists of 1 lakh equity shares of 10 each, fully paid up. 50,000 equity shares of 10 each, 6 called up. How much, sir? Only 6 rupees they have called up. The paid up and paid up. The company had general reserve. How much, sir? Company have 20 lakhs. It decided to utilize this reserve for issuing bonus shares at a premium of 50%. So what will be our sir issue price here? Issue price will be 10 plus 50% means 5 is equal to 15 rupees is a bonus issue price. Now for every paid up shares held, company for making what, sir? Partly paid up shares into fully paid up. That means what company is doing? Company issuing the bonus shares for fully paid up shares, and then company is making partly paid up shares into fully paid, because we have two shares. Number one, 1 lakh shares, and then 50,000 shares, right? So what we do first, we will call this final call, we'll issue the bonus shares, then we'll issue the fully paid bonus shares, right? Now what they said, let's see first. First is at the time of declaration of bonus. So general reserve account debit to bonus to shareholders. So how much is the uncalled, sir? Total call is how much, sir? 10. Out of this we have called 6, so 4 is uncalled. So 50,000 into 4 will go to general reserve. So general reserve account debit to bonus to shareholders 2 lakh, 2 lakh. Thereafter we will call the final call. What is the entry? Share final call account debit to share capital account 2 lakh, 2 lakh. And then we'll adjust what, sir? We'll adjust the final call. So what is the entry, sir? Bonus to, that is called where bonus to shareholders account debit to share final call. This is the first thing, 50,000 shares. Now that 1 lakh shares, what we are doing? We are issuing what, sir? Fully paid bonus shares, right? So what we should do for that? So first, or entry, we have only general reserve. So general reserve account debit to bonus to shareholders. How many shares are there, sir? 1 lakh. What's the bonus issue price? 15. So 1 lakh into 15, 15 lakhs. We have 20 lakh general reserve. Out of the 2 lakh we have used, we have again 17 lakhs. Out of that we are using only 15 lakhs. Next, bonus to shareholders account debit to equity share capital to securities premium. This for the purpose of what, sir? At the time of issuing the bonus shares, right? Is that clear? So that is 15 lakh. 10 lakh will be how, sir? 1 lakh equity shares into rupees 10 face value, because share capital always appear at a face value. And then again 1 lakh into what, sir? Rupees 5 will go to securities premium, right? This is a new sum added by our institute in your study material, right my dear student. I hope you enjoy this class, right? So I request you, if you wanna subscribe our YouTube channel, please subscribe our YouTube channel. And uh, one announcement I want to give you, that is tomorrow we will be conducting corporate accounting MCQ marathon at 7 p.m. evening. So if you want to score 15 out of 50 marks in MCQ, so please join our YouTube live tomorrow at 7 p.m. Right, my dear students? Okay, so it's time to say tata bye bye to everyone with a beautiful smile on your beautiful face. Study well, do well, take care.